This is Barry Salma speaking for Claim School Incorporated's blog, Salma on Insurance. Today we're going to discuss why an unambiguous pollution exclusion was enforced by a Kentucky Court of Appeal because gasoline leaking into a natural spring, as useful as gasoline is, doesn't belong in a natural spring and is excluded pollution. In Erie Insurance Exchange versus SHRI BRAMANI, LLC, et al., the Court of Appeals of Kentucky on July 19, 2024, was asked to reverse a trial court that the insurer's pollution exclusion did not exclude coverage for the negligent leakage of gasoline from one of the insured's underground fuel storage tanks onto the neighboring real property owned by people who were appealing the MOBERLY Brothers Properties. The policy issued by Erie Insurance Exchange was a commercial general liability policy which covered the premises and the operation of a convenience store and gas station on Lane Allen Road. The policy was in force until June 12, 2020, and generally provided coverage for legal liability to third parties arising out of bodily injury, property damage, or personal and advertising injury. As with most policies of insurance, the Erie policy contains several exclusionary clauses, including an exclusion of coverage for injuries or damages caused by pollution. On or about October 17, 2019, the Kentucky Division of Waste Management, KDWM, received a telephonic complaint of petroleum odors around the Lane Allen Food Mart. A KDWM official was sent to investigate it and noted what appeared to be petroleum leaching through a groundwater spring. Further investigation and testing indicated that the petroleum was coming from one of the Lane Allen Food Mart's underground petroleum storage tanks. Lane Allen Food Mart entered into an agreed order with the Energy and Environmental Cabinet, admitting that it had violated Kentucky Revised Statutes, Chapter 224, and the statute's accompanying regulation as related to underground petroleum storage tanks, and pursuant to the agreed order, Lane Allen Food Mart consented to an assessed penalty of $10,000 for the agreed-upon violations. Following discovery of the fuel leak, Moberly Brothers made a claim against Lane Allen Food Mart. Moberly alleged that the fuel leak caused it to suffer economic harm as a result of widespread permanent environmental contamination. Specifically, Moberly Brothers asserted that the leaked fuel entered and contaminated a natural water spring that was planned for the property and which rendered that property unfit for a bottled water facility that they were considering starting. Erie denied the claim based on the pollution exclusion contained in the policy, and Erie agreed to defend the claim against Lane Allen Food Mart under a reservation of rights. Subsequently, Erie filed a separate action against its insurers and Moberly Brothers and sought declaratory relief that they owed neither defense nor indemnity to the insureds. Kentucky courts have always strongly adhered to a policy of protecting the reasonable expectations of policyholders, and although insurance carriers have the right to impose reasonable limitations on their coverage, the question then becomes the reasonableness of the condition as a limitation on public policy, as opposed to one of strict contract considerations between private parties where no public interest is involved. Most consumers would recognize that gasoline is a product that becomes a pollutant when it leaks into the ground and contaminates soil and water. Even a valuable and useful product like gasoline can and does become a pollutant when it contaminates a natural resource. The focus of the inquiry under the absolute pollution exclusion is not on the nature of the substance alone, but on the substance in relating to the property damage or bodily injury it causes. When the purported pollutant results in contamination, negative health, or environmental effects, the exclusion is enforceable. Moberly Brothers alleged significant environmental damage to its real property due to the gasoline that leaked from the Lane Allen Food Mart's underground storage tank. Moberly Brothers alleged in its complaint that the petroleum gasoline damaged and contaminated its property and seeks damages to restore and recover the use and value of the property. This is precisely the type of pollution-related damage that falls within the scope of the exclusion. Gasoline is clearly a pollutant when it leaks from an underground storage tank and enters a neighbor's land and contaminates the water and soil thereon. Because the pollution exclusion clause was found to be unambiguous, the property damages suffered by Moberly Brothers are not covered by Erie's policy of insurance, and the trial court therefore erred in entering a judgment against Erie. The judgment was reversed and remanded for entry of a declaratory judgment in Erie's favor. In my opinion, no insurance policy covers every potential risk of loss. Almost every liability policy issued in the United States has a pollution exclusion. Since gasoline escaping into the land is obviously a pollutant, and the insured admitted to the pollution, the exclusion applied and the insurer neither owed defense nor indemnity to its insureds. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. You can subscribe to the blog and you'll receive access to every blog posting, usually 5 or 6 a week, and you'll also gain access to the more than 4,800 blog postings. You can also subscribe to the videos on rumble.com or youtube.com, and if you do, I'd appreciate a like on the YouTube button and or a thumbs up button on rumble.com. And if you're interested in further detail about insurance claims, insurance fraud, and insurance law, please consider for a small fee subscribing to my Substack publication. Thank you for your attention.